Welcome back and thanks for staying with us. We're joined by George Joseph, who's the CIO and CEO of ASK Investment Managers. Welcome, George. Uh, you know, let's start off by contextualizing how you're seeing 2026 and in this uncertain environment, how should one look to kind of place their bets?
Thank you for having me here. It's an interesting time in markets. You see global uncertainties are weighing, and a lot of good measures from the government has come in the previous year. What we are seeing is that in the valuations in the large cap space, especially Nifty 50 companies are looking extremely attractive, and it is probably one of the cheapest point relative to mid and small caps over the last 2 decades. And that looks very interesting to us. And so all our portfolios, what ASK manages for our clients has been skewed towards this view. That is broadly I would like to talk about the markets.
George, hi, good afternoon. Talk to us about what your expectation is from the earnings season. We're kickstarting the earnings season next week, the Q3 earnings season, that is. Where do you think leadership could emerge in the market going ahead? And perhaps, is this the quarter where we see some sector churn happening?
Definitely yes, because many things have happened in the previous quarter. One is INR has depreciated dramatically, and in the same case, we have seen that there is a good amount of turmoil uh, developing in the US markets. When it is talked about the AI wave, whether it is dying down or not, but the breadth is definitely moving towards a few names in US, especially when it comes to the earnings growth. And that is the same case for, when we look at the market participation as well. So the breadth is significantly deteriorating, which is concerning globally, which means that there is more pressure in the markets from the global standpoint. In that backdrop, when you look at the earnings in India, the tariff deal is not yet done, and people were all waiting for that. And at the same time, that is getting prolonged, and you are seeing there is a good recovery cycle that can kick in from the domestic economy oriented sectors, be it banks, auto, and other consumer related businesses. That will be the more highlight of this quarter. But at the same time, what we have to remember is, there are a lot of measures which has been taken by the government and RBI in terms of rate cuts, in terms of GST cuts, and so on and so forth, which also will start playing out in this year. So in my view, and what we believe when we are looking at our clients' allocations, this is a time to look at some of the high quality names in the large cap space, which we can place our bets on. And that's where the recovery cycle also is going to be predominantly beneficial from the earning cycle perspective. So we are very bullish on the financial services space, especially banks and large private banks, as well as some of the NBFCs, where the benefit will flow through ultimately. And also when we look at the cement companies' valuations, last quarter was a washout quarter, and there could be green shoots visible from this quarter as well. So we look at from valuation perspective, we like these two pockets the most, but at the same time, in terms of business cycle, we like more of India-centric, domestic, cyclical, that be it real estate, engineering, capital goods, energy transition. All these becomes a good long-term theme to play from Indian context.
Let's unpack that a little bit, George. Let's talk about energy transition as one of those themes and especially interests me because it's a decadal theme. How do you play that? And do you have enough comfort in terms of the valuations and some of the plays with regard to energy, especially new energy?
Yeah, some of the it's not specifically new. If you look at from the entire energy transition space, we can look at be it some of the beneficiaries of the the new energy companies, and as well as the intermediaries are also very interesting to look at. So every sector, when we look at what we do is we look at the major beneficiaries and the second derivatives and tertiary derivatives which can benefit out of it. When we look at from that perspective, there are many companies to play on. But at the same time, it's a highly volatile sectors, be it manufacturing, engineering, capital goods, and all these are highly volatile sectors. But that is a cycle we are in. I would relate to it is not at the same fashion at which what we have seen between 2003 to 7, but in some shape or form, this is looking to me very similar to that. Yeah, at the backdrop of low China growth and low India growth kind of scenario, but the cycle is more towards this specific domestic cyclical themes. So there are few pockets where we like at this point in time, and we are betting our clients' money on that.
Okay. And George, what is your take on metals? And I ask this given the fact that gold prices continue to be volatile, but we're seeing a little bit of profit taking in silver prices. But then again, they spike up once again, so volatility over there as well. On the back of that, where do you believe Nifty Metal as an index is headed?
So the metal index in the last 5 years has already gone up 6 times, and it is a massive rally, and that was the best performing sector in 2025. And what we believe is that some sort of breathing time is required for the sector to come back to normalcy in terms of valuation as well as in terms of expectations. So we are almost zero on exposure towards metal companies, and differentiating between metal companies always a tough task. Steel company is a steel company after all. But at the same time, we can look at some of the beneficiaries or the companies which are related to more value-added commodities. That's a place where we like to bet on. But as we speak, the commodity exposure to our clients' portfolios are significantly low.
Okay. George, you suggested that SMIDs will likely outperform as well because we've seen a bit of a correction in terms of valuations. How do you expect the performance, and in what pockets do you believe that the performance will be the strongest?
No, I don't know whether it got it wrong. I didn't mention that SMIDs will outperform. What I mentioned was the large caps is a space to be in. It is looking very, very attractive to me. I am more of a mid and small cap guy all through my career, but ultimately we have to look at where the clients can make money. So from that perspective, even after this good correction in many stocks, what we have seen in SMIDs, to me, the large cap space is the place where you can make good returns, especially say private banks, large private banks look very interesting. Some of the NBFCs are looking very interesting. Cement companies are looking interesting. So there are many pockets which you would like to bet on in the large cap space, and Nifty 50 companies in particular. To my mind, it is trading at many companies are trading at record low valuation relative to the mid and small cap. So I will be significantly circumspect on the valuation even after this correction in mid and small cap. But earnings growth will be a benefit. We will look forward for how the earnings recovery will play out in the mid and small cap space, which to my mind it will be more surprisingly benefiting the large cap space itself. So our bets are on large caps.
The bias continues to remain on the larger end of the market. George, on that note, we'll let you go. Thanks once again for speaking to us. Lovely to have you on board.
Thank you. Thank you.
Okay, viewers, with that, time to slip into a very short market. Just taking a look at if there's been any recovery from the day's low for the index. We're around that 25,900 mark, pardon me, and now seeing a further decline. Seems tough to be holding on to the 25,900 mark to an about 1% cut on Nifty. Nifty Bank on the flip side looking slightly more resilient, about a 0.5% cut on that index. India VIX continues to spike up, and the advanced decline ratio is continuing to get worse in the sense that it is continuing to skew more towards the declines, and as more stocks are slipping into the red. That is what the market breadth is looking like right now, and about a 1% cut on the Nifty. Time for a short break. We'll be talking more about the way the market is moving on the other side.
Welcome back. We're joined by Arpit Beriwal, Manager, Derivatives Analyst, Equity Research at Motilal Oswal Financial Services. Arpit, great having you. How are you viewing markets? We've seen a bit of a cool-off. Opportunity to buy, you reckon?
Very good afternoon to all. So before starting with the markets, one thing that we have to see is they've seen a very good spike in India VIX, almost 7.8% high after a very long dull phase in last couple of weeks time. So look at the structure on the Nifty and Bank Nifty. Nifty definitely made a new life high this week, but since then we have seen some selling pressure at the higher levels, and today we have seen quite weak market breadth. So looking at the structure of Nifty, particularly Nifty is trading in a broader range between 25,750 to 26,350 levels. Now Nifty is again back to its nearest 50 DEMA support near 25,800, 900 levels. But the concern part is that it is still forming lower as lower lows. So till it doesn't surpass the previous day high, a stance would be a mixed setup with upside cap. Levels to watch out for would be 25,800 and on the upside 26,000. A decisive close above this levels will definitely set the setup for the fresh next up move. 25,800 is a major support zone on the downside, whereas on the upside 26,000. So better to wait and be very selective till it holds below 26,000 levels. Our bias would be negative. Talking about Bank Nifty, so Bank Nifty has been relatively outperformer so far. Today we have seen some cooling off from high levels from 60,000 levels, but ICICI Bank and Kotak Bank is relatively outperforming, because of which there is a slight betterment in Bank Nifty. So with the setup wise of Nifty to Bank Nifty is relatively strong as compared to Nifty. So if you want to play on the positive side, our stance would be positive on the Bank Nifty with major support around 15,500. Upside move can be seen to a 60,000, 60,200 levels. For Nifty, it's better to wait until it holds below 26,000. Better to adopt a sell on bounce stance for next few days.
Okay, so that's the way one should be approaching the market right now. But Arpit, hi, good afternoon. In a market like this where we've seen some pullback, where are you seeing buying opportunities, if any? Is anything looking attractive this afternoon?
So overall, the theme has been start of the year is stick to selective outperforming sectors and outperforming stocks. So our likes would be stick to heavyweights. So from the gold space, we would like to continue to go with Titan. First preferred pick would be Titan. So a classical range breakout on the weekly and the monthly setup. Yesterday, with a very strong commentary, the stock opened gap up, holding a life high territories near 4250 levels. So from here on, we are sensed that the stock can continue to head higher towards 4400, 4500 plus levels. So Titan would be a first pick with in spite of market volatility. This would be a best preferred pick with keeping stop loss of 4100 for an upside move towards 4400. Second would be from the pharma pack, and the huge outperformer counter is Torrent Pharma. So if you look at the overall setup wise, pharma space, Torrent Pharma has been a huge outperformer. A classical monthly range breakout above 3950 levels, forming higher as high low structure on the weekly scale, gave a range breakout after above 3,900. Today there's some cool off, but the bigger trend is positive. So it's kind of a buy and dip counter. One can go long near 4,020, 4,030 with keeping stop loss of 3,900 for an upside move towards 4,250, 4,300 positioning.
Okay, so Titan and Torrent Pharma looking good, but let's pull up the stock. 11% uptick on Panesha Biotech as we speak. Arpit, your take on some of the pharma counters right now, some profit taking on Nifty Pharma as well. Tell us what is your take on which stocks are looking good. Yesterday, Cipla was the top Nifty loser. Do you believe it now looks attractive on the charts?
So if we see overall Nifty Pharma Index is in strong uptrend, consolidated with positive bias. So look at the setup wise, if we look at the outperforming counters, first we'll talk about the outperforming. So as we already discussed, Torrent Pharma and Laurus Lab are preferred picks. So look at the setup wise, Torrent Pharma, we already shared the view that stocks look good for next 8 to 10% upside move towards 4,300, 4,400. Second from the pharma space would be Laurus Lab. So stock is in clean uptrend. We have seen good rally from low levels, but the structure of higher rise high lows is intact from last 3 to 4 months. Weekly scale also it is moving higher. Daily scale it is consolidating, but definitely the base has shifted higher from 1,000 levels to 1,050, and slowly steadily the stock can definitely head towards 1,150, 1,200 levels eventually. But talking about Cipla, so yesterday we have seen a very stark contrast between the setups such as pharma space where certain counters are underperforming, and if you look at the setup of the weekly scale for Cipla, so definitely a big bearish candle has been formed. Yesterday also there was some selling pressure. Today there is no follow-up buying. So it's I think better to wait till it doesn't surpass above 1480, 1485 levels. It would be kind of an underperforming counter. So better to avoid and stick with the outperformers within the pharma space.
Okay. The other Sunil Subramanian joining us as well, founder and CEO of Sense and Simplicity. Sunil, how do you play the electricity power theme? Do you play through the ancillaries, through the EPC companies, through the financiers, through the power gen cos? How do you play it?
EPC and financials are my key bets of the lot. Because I
Okay.
think ultimately financials will benefit a lot. And I think the EPC contracts are going to be the executors. And I think that's where the higher operating leverage comes to play.
In terms of preferences?
I can't talk stock specific. So
Okay, okay, sure, understood. But financiers and EPC companies, that's how you would play it. All right, and Sunil, how would you play pharma in this market? Because that's another very interesting play. The just there are there's the
I think
whole buzz around semaglutide, GLP-1 opportunity in terms of the unlocking, and then you also have uh, you know a large part of the CDMO opportunity which opens up to a lot of pharma players. How do you play that?
it's not just these two, right? You still have the generics part and the domestic
Yes.
pharma part. So let's look at it as a four-part puzzle, right? And in that four-part puzzle, clearly the high growth, but partly set off by high valuations, is the Ozempic semaglutide opportunity. The stable opportunity with the consistent growth is the domestic pharma. The generics and the CDMO parts are the ones which are more exposed internationally. There, you not only have to look what the US is going to do with us, but also about how the currency is going to behave. So I think that allocating, I would say, maybe 60% to the domestic and to the semaglutide opportunity, and splitting the balance 40% tactically between generics and CDMO is the way I would play it.
Okay, so that's your take on pharma. Sunil, hi, good afternoon. Talk to us about the markets in general and overall sentiment in the market. What are you picking up? Because this is going to be the fourth consecutive day, at least, I mean, in the week since the beginning of this week. We've only seen pressure, and that pressure has intensified much more. Does one read this as a sign of weakness in the market, or should you be looking at the glass half full approach and think of this as a buying opportunity in the market?
It depends on the outlook is for the year or for 3 years or more. I think that what's happened is that it's clearly that while we had a good start to the new year, the later parts of the week have not been great. So what this tells you very clearly is that FIIs, when they are going to reallocate the money, they probably will come in from mid-January. So they are still nervous about India from valuations, growth perspective. So FIIs are yet to make a strong comeback. In fact, the net selling continues. Similarly, DIs also are waiting for the onset of the earnings season to decide where to allocate their cash. So they wouldn't be doing much fresh buying today. Now, along with the halfway through the earnings season, you will have the budget come in and that analysis kick in. So it's a time when fund managers would rather sit on cash rather than go and fully deploy, because we want to see how these two cookies crumble, both the earnings season as well as the budget. So after the mid of February, when you've digested the budget and a lot of the earnings have come in, is when you make your fresh tactical allocations. Now, that necessarily doesn't mean that the FIs are also going to jump in. For the FIs, there's a lot more at play in terms of looking at the complete earnings season and then taking a call on whether the earnings are justifying our elevated valuations, which are still elevated. So FII return would probably take a little more time for them to understand, because the GST impact, right, will play out even this quarter only in the auto side. It's only with the summer that you will see the consumer durable aspect play out, and people would rather wait and see whether it really leads to a large jump in volumes, and then there will be a real estate play. So since the GST effect is going to play it out through the year, right, people will be keeping tactically higher cash balances and then deploying it. So from the year perspective, I would see it as a year of two halves. The second half will do much better than the first half, but whether that recovery will be enough to deliver a fabulous return this year from equities on a 1 year basis, it's 50-50. So I would say that, so to be remain cautious, to be on the side of large cap for the first half of the year and stay staggered through your approach and diversified is a better bet, because on top of it you have the overhang of the trade deal and now 500% tariffs being talked about. So there's a lot of uncertainty in the air from this year's perspective, but the year should end well. And this year is a year where probably you allocate well and reap the rewards in the following years. So I would say that's why my outlook on the market is from a short term, it's a very tactical, very nose to the ground kind of a approach for this year. But stick to the longer term stories which are clearly developing from an investment perspective.
Okay, so that's the advice on how to approach the market right now. On that note, we'll slip into a very short break. Nifty continues to be under pressure right now, but at least we're floating above the 25,900 mark. 25,914 is where we are at, to be precise. Time for a quick break. More news and updates and more market chatter on the other side.
Percent. Talk to us how this one is looking like on charts.
If we see overall the broader market, we have seen quite sharp sell-off across the broader market. Now talking about the overall Hudko charts, weekly setup, the stock is broadly trading in a range between 205 to 240 levels from last almost 6 to 8 months. On the immediate basis, if we see the stock has given a breakdown below its short-term moving averages. And look at the setup wise, the next support is around 2010, 2005. So overall, a sense is that the bias would be negative. On the immediate side, 224 would be a hurdle zone. On the downside, the weakness can be seen toward 205, 208 levels. So overall, a kind of a sell on bounce counter with weakness around below 228 for a downside move towards 206 levels.
Okay, so that's on Hudko. Kunal, talk to us about some of the top losers that we're seeing in the market today. Signature Global and BHEL, both down 10%. In fact, Signature Global is down about 11% as we speak. Good time to enter into any of these stocks?
So not for Signature Global, because the stock has confirmed a fresh multi-year breakdown. I think it's broken below the 2025 lows. That low was around 988 levels thereabouts. Today the stock has made a fresh low of 950. So, and that too on the back of much higher volume. So this could probably be an indication of a fresh trend on the downside for Signature Global. But I think BHEL could be an interesting case. I'm not sure why the stock has reacted by this 10 to 12% on an intraday basis. But then on the short-term charts, I think 260 is a good support point for BHEL. In case if the stock happens to come back to that kind of a territory, I would believe it's a good zone for a contra buy.
Okay, so that's on BHEL and Signature Global both. What about, Arpit, talk to us about the move that we're seeing on the flip side on some of the other real estate counters that are doing well for themselves. Sobha is one of them. We've seen positive updates coming in from this company as well. Talk to us about how Sobha and Oberoi Realty, the only other name from this index that's shaping up in the green. Now, Oberoi Realty has also seen its fair share of volatility in the recent past. Is there any strength on the charts of Sobha and Oberoi?
If we see overall the reality index from last almost 6 to 8 months, it has gone into a sideways corrective phase. Now talking about chart structure of SOBA particularly, if you see the setup on the monthly set, definitely very huge consolidation is going on in SOBA from last almost 6 to 7 months between 1440 to 1750 levels. Relatively in market carnage, the stock is still holding well and it has taken support near its around 50 DEMA, negating the formation of lower highs. So definitely a risk reward is favorable at this junction with crucial support around 50-20 levels. The stock can head towards 1580, 1640 levels. If we talk about Oberoi Realty, relatively Oberoi Realty has been underperforming from last couple of months. However, look at the weekly setup, it is trading in a broader range between 6050 to 1750 levels. So I think the sense is that compared to both the counters, Showa Realty is definitely better placed and we can see much more better upside towards on the higher side for Showa Realty. However, for Oberoi Realty, the next upside hurdle would be around 1770 levels. On the downside, 1680 is the support zone.
Okay, Niva Bupa, Kunal, is that something that you track closely? I know you might not have a very long chart in terms of timeline, but how is this one looking? Just the volatility in the counter in a very short span of time since when it's listed is quite large. So I'm trying to get a sense as to what next for this one.
I think we discussed the stock yesterday when we were looking at the stock with potential breakout. 78 is a breakout point for Niva Bupa. We flagged off this level yesterday. Today the stock, I think mid-session somewhere managed to cross this hurdle point of 78, and now it's moving towards the next set of resistance. I think the next level for Niva Bupa on the charts where the stock could take some bit of resistance is around the 83.5 to 84 levels. That's where I think in September end 2025, the stock took a pause, after a rally, and from there a next leg of a correction downtrend started off. So when the stock goes into a revival, the previous resistances, they become like a pit stop for stock prices, where there is a pause, some selling pressure which gets originated, for the stock price. So would expect the stock to gradually head towards the 84, 84 and a half kind of a zone.
Okay. Arpit, I wonder if you track any of the amine counters because both of those are buzzing, Alkyl and Balaji.
If you see generally, these counters are very much seasonal, and if you see after a very sharp downtrend, both the counters have seen a sharp up, particularly if you talk about Balaji Amines, the stock was in totally downtrend for last almost 7 to 8 weeks. Finally, today we have seen a sharp upmove from the lower levels. But if you look at the setup on the bigger time frame, still the stock is forming lower as low lows on the monthly and the weekly setup. So I think it's just a pullback move, and the level that we have to watch out closely will be around 1260, 1270 levels. If it manages to close above that, then only there will be a major change in reversal. But till then, it's just a sharp pullback move. So better to reduce your position at this junction and wait for a closing above 1260, 1270 zones for any change in reversal in this counter.
Okay, Mr. Subramaniam, we're just getting word from agencies that the Finance Ministry plans to scrap restrictions on Chinese firms for government contracts. Chinese firms can also now once again start bidding for government contracts. We're seeing some of the defense stocks heavily under pressure. Talk to us about what impact this could have, what kind of participation were we seeing earlier from Chinese firms? If you could just help us with some perspective there.
I think that basically it's a question that India's largest imports is from China. Okay, we already had a very long trade relationship with China. The Galwan episode and everything made us to put a lot of curbs and everything. And the second aspect is that the Chinese always have a tendency to dump stuff at low cost and make domestic industry less competitive. So these were the facts that were basically both the political and economic reasons that had driven a softer thing, a harder line on China. So now I think in the context of the realigning forces, with India being the chair of the BRICS, right? I think that some kind of a realignment and treating the political aspects separate from the economic aspects, but making sure that we can take advantage of the Chinese technology. The Chinese are far more advanced on AI and technology than us. And of course, they also have large volumes which give them benefits of scale. So I think in a tactical way, this shows a very pragmatic approach to the government that will allow them into some sectors where it can be a win-win in terms of the fact that we get semi-finished parts from them, finish it in India and export of India, especially in the context of the trade agreements India has signed with other nations, right? In order to supply those goods in a competitive price. I think some level of Chinese involvement, pharma, for example, you mentioned defense, but pharma also is a very key part where a lot of APIs come from China. So I think this shows that the government is making a more pragmatic move towards a realignment between the BRIC countries, and China happens to be obviously a very big part of that. So certain aspects of the domestic industry would naturally feel the heat and the pressure because their supply could be substituted with the Chinese supply. But on the larger context, I think our exports and everything could see a massive boost if we increase these kind of Indo-Chinese partnerships. And like they say, a very colloquial way to say, the elephant and the tiger have to learn to dance together. Or the
Okay.
dragon, if you want to use the word dragon. The elephant and the dragon have to dance together if they are to take advantage in this new Trump world.
All right. We'll see how much they can manage to do that over the next 3 to 4 years, Sunil. Kunal, with regard to some of the metal counters, these jewelry related plays, a Kalyan, a Titan, a Senko, how would you look at these on charts? Any of them which really stand out to you?
If you see overall from the gold finance space, as we have already discussed, the Titan would be a preferred pick. So as the market theme is, it's better to stick with the heavyweights as there is definitely a lot of volatility in the mid cap and small cap space. So Titan would be a preferred pick within this space. Looking at the chart specific, a very strong range breakout on the monthly scale above 3900 levels after almost 24 months. The structure of higher highs, high lows is intact. Though we have seen yesterday a gap up opening, but the good part is that it is holding to its life high territories. And from here on also our setup is from next 3 to 6 months perspective. Definitely the stock can head towards 4500, 4600 level positionally. So Titan would be a preferred pick within the entire space, given the nature of the stock along with their setup wise. So it's a very strong setup with major support around 4000. The stock can head towards 4500, 4600 levels positionally.
Kunal,
Okay.
what do you make of some of the IT names on charts? Again, Tech Mahindra, TCS, and Oracle, a Wipro, all down 2.5% plus.
Yeah, today these stocks are down, almost reversing what they gained yesterday.
Yes.
But then they're still above their short-term support levels. So I think the Nifty IT index made a low 3 or 4 days back, or maybe start this week at around 37,300 levels, 365 to be precise in the spot zone. We are trading with a margin of almost 2 percentage points higher from that zone for the IT index, or maybe 1.5 to be precise at current levels. So till the time those supports are not broken, we may expect that this could just about be a zone where the markets are under pressure. And today, all stocks, majority of the all sectors and majority of the stocks are into a selling spree. So I think that could be a pressure on that. But till the time those lows or the critical supports are not broken, we may expect the trend to continue on the upside.
Okay, we have an update coming in from wire agencies wherein we understand that the High Court has upheld Power Grid's move to ban KEC International from taking tenders for 9 months. Remember, a few weeks ago we did hear this, wherein KEC International said that Power Grid has barred them from bidding for any tenders for 9 months, and today the High Court has upheld this move. Very negative for KEC International, a 4% drop on that stock. The High Court is going to be hearing KEC International's plea on this matter on the 19th of this month. So it's going to be a very crucial development to watch out for. So yes, big cut coming in on KEC International. But that's on it. Let's shift focus and talk about some other sectors that have been in focus quite recently. Mr. Subramanian, what is your take on the auto space right now? A 1% cut today, but the auto sales number for the month gone by have been very robust. Do you believe the quarter 3 earnings are going to be as good?
Not as good as the top line growth. And the reason for that, I say, is that what I've seen, at least from my channel checks, is that some of the auto companies have had to pass on cuts to boost volumes more than the GST cuts, right? So there would be some pressure on the margins, I think. But at the same time, from a EPS perspective, the damage will be lesser because these are all high operating leveraged companies, heavy investment in fixed assets. So to that extent, any little bit of sales at a lower margin also could boost the EPS. So I think that overall, the level of increase that the sales increase is expecting from EPS may not happen, but it still be a good, healthy quarter. And towards the end of the quarter, you will get the sales numbers for the year end. And as you know, depreciation for small businesses and all is a key trigger to buy auto related vehicles. So there would be again a boost in terms of the Feb March end kind of sales and buying. So it will be a quarter which will be a bit volatile in the middle of the earnings season, but should end well for the auto group.
Okay. Let's talk stock specific, in fact, within auto. Arpit, SML Isuzu, do you like the way in which the chart structure is shaped up and the kind of returns that it's given?
So if we see overall, the auto index has been a quite outperformer from last couple of months. And if you look at the auto ancillary, overall the setup has been quite strong. Today we have seen some cool off from the higher levels, but if you look at the setup wise, definitely a very strong setup has been seen. And if we see the setup wise, definitely the outperformance clearly seen. On the monthly setup, it has given a fresh range breakout of about 4,300 levels, 4,400 levels. And look at the setup wise, in spite of market turmoil, the stock is holding well. So look at the setup wise, a very strong base is formed near around 4,100, 4,200 levels. And the stock can definitely head towards 4,700, 5,000 levels positionally. So I think with the key support around 4,100, the positions can be hold for an upside move towards 4,700, 5,000 levels positionally.
Okay, so that's the take on SML Mahindra, earlier known as SML Isuzu. But shifting focus, I just want to take a look at some other stocks that are buzzing in trade today. On the flip side, even though there are very less number of stocks that are in the green right now, it's India Cements that has seen a very sharp uptick, a 4.5% uptick on that one. Sobha Trident we've spoken about. Zensar Tech, you have Fact, Ipca Labs, IDFC First Bank, Dixon. These are some of the names that are shaping up well right now. Kunal, on the charts, any particular take on IPCA, IDFC First, Dixon? They're holding up quite well.
Yeah, so IDFC First Bank is something which I picked up as a BTSC trade because this seems to be a move which indicates that the last 3-4 days of that slight underperformance IDFC First Bank had, I think that could now get covered up. So we could be looking at a potential minor uptick. I will not call it as a breakout given the context of the market, which has been very, very volatile today specifically. IPCA Labs also I think is showing signs of a revival of sorts. The stock is confirming breakout the previous highs. 1540, 1535 was the previous high for IPCA Lab, and that too on the back of some higher volume. So after a gap of almost 1.5 odd month, the stock has managed to make a comeback and broken past about that candlestick high, which it had made in the month of November mid for IPCA Lab. So that's a chart which looks attractive so far, but we'll just need to be a little bit more alert with respect to the overall market volatility, because if this is the kind of behavior the markets exhibit over the next couple of days, then there could be a point that many of these potential breakouts could probably fail and these stocks may go back into a reversal mode.
Okay. Mr. Subramaniam, from the financial space, is the focus still on PSUs and PSU banks? Do you believe that they are still poised to outperform the private sector banks, or do you believe that we could see some churn internally?
We could see some churn internally. I think the budget is a key trigger there, because whether PSU bank mergers are in a big way going to be announced or not is an important event to watch out for on the budget. The second is that if you look at the GST play out, right, the initial half of the year is going to be auto and consumer durables. And the EMI related financing there is more of a private bank NBFC space. So you're not going to see huge credit growth from the PSU banks in the first half. Will be made up in the second half as you move into reality in terms of the housing sector, as well as then you move into the capex cycle starting. So again, my view is in the first half, private sector banks and NBFCs will do better. And in the second half, PSUs will again gather pace. PSUs still have a valuation gap with the private sector banks on their side. So even if you allocate PSUs starting from now, you still have a margin of safety. You can continue to accumulate, but expect a real bounce only in the second half of the year.
Very interesting. Okay. Kunal, let's start closing, and let's start closing with in a positive note. Eternal, 1.25% higher on a day like this.
There are not many positives. India VIX is up 7%.
Is that a positive? Is the question.
So if he's looking at only the percentage gains, then yes, maybe.
But Eternal is genuinely up. So trying to get a sense.
Yeah, so I think on the short-term charts, this could probably be a point where many of these stocks which have been beaten down earlier, they get a more of a reprieve rally. Where you see these stocks bouncing back, money being moving on out from these stocks to some other name, such. So I believe that could be a case where you might see Eternal moving up higher. But the structural charts for Eternal are still on the negative side. I would actually expect that the stock may bounce back towards 290, 295, but that actually could open up a good shorting opportunity for medium-term traders. So one has to be very careful over here which leg and how much time frame or the short-term aspect one needs to participate on. If you're looking at this as a very, very short-term play, then yes, you might expect the bounce back towards 290, 295. But on the medium-term charts, the trend is definitely on the downside for Eternal.
Okay, so that's the take on Eternal. About 2 minutes left. Mr. Subramaniam and Arpit, thank you so much for your time today. We'll start winding down for the day, and let's take it across to Ashesha to do the same. Ashesha, very negative day for the market today indeed.